Hi everyone, it's Nick from TraderLion here with the when to take profits video. This is a very hard topic to cover because there are no hard rules on when to sell, and so it's very complicated knowing when to do it. Traders struggle the most with selling. Buying is the easy part, selling is the hard part. So through this presentation, I've got a few examples, and that's what I'm going to be basing this off of to hopefully show you guys what's going on in our minds when we're looking to take profits or sell a position. So first up, I have BABA. Now, what I want to focus on is this gray moving average right here. Under the purple one, we've got the gray moving average. That's the 65 exponential. That's a 65 EMA. The 65 EMA is something that Ross has found to be incredibly useful through all of his research and time at one. And so we use it here because there's a lot of times you'll see a stock shake out below the 50-day moving average, and that's where most people have their stops. So it shakes out below the 50-day, and it never ever cuts below the 65. The 65 really keeps you in positions through shakeouts, and it's a very good moving average. So there's many buy points on BABA here depending on your trading style. You could have bought through the 50-day. You could have bought right here when it broke this high from the gap up. You could have bought over here when it broke the previous high. So if you would have bought BABA over here, the 65 would have kept you in for a while. It pulled back in here, it shook out below the 50-day, but the 65 held it. Unfortunately, it ended up coming back down and breaking below the 65, so we would have been out. So that would have been a nice run from about 110 to 175-ish on BABA with no reason to sell as long as it's above that 65. So next up is Melly. Melly, again, there's tons of buy points. You could have bought through the 50-day here. You could have bought through the highs right here. There's many buy points, but what we're focusing on is that 65 EMA. So if you were to buy it over here, you ride it all the way up. Looks like an earnings gap, and then it starts to come back in, and it finally stops you out over here. This is just barely under the 65, and so this is where the art side of trading comes in. Some people will sell that, some people will hold it, but this was definitely a sell right here. You would have taken this from about 170 to about 270 on Melly just by looking at that 65. Next up, MU. So MU is a good example because it moved way more than 20 to 25% in between its bases. If you were to buy over here, if you were to buy right here, wherever you were to buy it, it moved from either $12 or $18 and didn't give that sell signal. It shook below the 65 here, but it closed above it. And it didn't give that sell signal till about $30. And you could see it has a lot of momentum moving up, and then it starts to move more sideways. And so it's getting a bit weaker. That would have been a signal to sell right there. And of course, you could have bought it again here when it broke out. Now, this is where things come into play, because if you were in MU from all the way down here, $12, and it's shaking out below the 65 EMA at 30 something, you're up over 100% in your position. So you could give it to the 200 DMA, which would have kept you in this entire time. So SQ is a good example I wanted to show. SQ, many buy points throughout here. And you could see that it never breaks that 65 EMA. It broke the 50 over here, but the 65 is still holding it. The sell on here is a little bit different. Once we got up here, you could see SQ is moving, and then all of a sudden it starts to go parabolic. When stocks go parabolic like that, you want to start paying attention because it's getting extended. At this point right here, it was now 100% above its 200-day moving average. That was a very clear sign to take profits. You're 100% above the 200. The 200 has to catch up. And so when it's going parabolic, you definitely want to sell into that strength and take profits because that's what's going on. And you see that it pulled back in and it let the moving average catch up to it. So now for the last example, I'm going to show you SPY. This kind of goes hand in hand with what I mentioned on SQ. If you look at the S&P 500, this is 2016 and then all of 2017 up until the recent correction. Now you see that we had a steady uptrend here, and again, holding that 65, except for right here for 2 days, but holding that 65, but then all of a sudden it starts to go parabolic. And when things go parabolic like that, it's never good. It's probably coming to an end. So when you're right here, it's not as clear as it is now in hindsight, but the market's moving in a steady uptrend, it starts picking up big time, going parabolic, you want to start getting cautious, selling your positions into the strength because something's going on. So the takeaway from all this is the 65 exponential moving average is a critical moving average. It's one that I would not be able to trade without. It keeps you in trades throughout shakeouts. It really holds you in big winners, and that 65 EMA is really a good moving average to put emphasis on when you're deciding to sell. Also, when a stock starts going parabolic, it's getting far away from its moving averages, you want to pay attention because it's either going to pull back in or it's going to not do anything until the moving averages catch up. So if something starts going parabolic after a steady uptrend, it's likely coming to the end of its run and it's going to sell off, and it's a good time to take profits and sell into that strength. Trading is half science and half art, so you've got to make decisions day in and day out that are not very clear, and over time, as you become more comfortable, they will start to become more clear. When things start to go parabolic, you won't even have to think about it. You'll know to start lightening up into that, and if something breaks below a 65, you'll know to sell. It'll come with time as you get more comfortable, but that's really it for when to take profits. There's no rule, but hopefully what I've shown you in some examples so far makes it a lot more clear on when to sell if it's becoming extended, or when to sell if the move is starting to get weaker and it breaks below that 65 EMA. So I will be following up in another video, but this is, like I said, a very tough topic because there are no hard rules and it kind of comes with time when trading. But hopefully that this was a good start, and I will have more videos and be happy to answer any questions on this as well. Have a fantastic rest of your day, guys, and I will see you in the next video.